right, well, my next guest has led a venture capital investments in China for New Enterprise Associates, one of the biggest venture capital firms and one of the most successful since 2003 in China, focusing both on power and energy as well as on information technology. So Scott Sandell from NEA, really glad to have you here up from the peninsula. I'm glad to see you and I are the only guys wearing ties in like a 50-mile radius here.
It looks like it, Corey. Thanks for having me.
Did you scare them at Pete's this morning?
I did.
Talk to me about NEA. First, I want to talk about some of the big deals you guys are in. Let's talk about Groupon. It's one of the most exciting private companies out there, purely from a valuation perspective, if nothing else. How did you guys get into Groupon? Why did you get into Groupon, and why are you still there?
Well, it's a classic NEA story. We like to back great entrepreneurs. We like to back them again and again and again. In this case, it's the fourth time. The two gentlemen who started Groupon started three other companies before that, all of which we had invested in, two of which had already gone public.
Not Interbase, you're talking about Eric Lefkowski and Brad Keywell.
That's right.
The two companies are Inner Workings and Echo Global Logistics.
Yes, and the third one is not yet public, but doing very well.
Which one's that?
Oh,
Media? Anyway.
Media Bank.
Media Bank, sorry. Now, those publicly traded companies have done okay for you guys, not so good for public investors.
You know, I don't follow them, honestly, that well, Corey. We've focused most of our attention on Groupon. I think we still have holdings in both of them, and they have been good investments for us.
As it relates to Groupon, what did you see there? Just that Eric and Brad were involved, so you wanted to follow them into the next deal?
Well, we liked Andrew, too.
Yeah.
But honestly, when it started, it was called The Point. It wasn't called Groupon, and they were doing something entirely different. So it was really a bet on the people. And they pivoted 9 months later, and the rest is history. It's not just a company with a high valuation. They have an amazing business.
Now, within NEA, how does that work? You're here in Menlo Park, or here broadly defined. Do you oversee those kinds of investments, that being in Chicago?
It's actually, the project was sponsored by Peter Barris and Harry Weller, two of my partners in Chevy Chase, Maryland. So,
and Peter Barris is on the board of both Inner Workings and of Echo, I think?
Yeah, Harry's been on the board with him and several of them, and was on the board of Groupon until recently. TiVo was one of your deals, yes? One of NEA's deals, not mine personally, okay. But it was another company with the same kind of story. I mean, we knew the two founders. They had been at Silicon Graphics, and they came to see us about starting a new company. The idea that they had to start the company with was entirely different. Here again, somewhere in the first year, they pivoted, and they came in with the idea for TiVo before they had developed a product. And it was actually fairly controversial within the partnership because not everybody thought it was going to work. Some people thought it was crazy. And anyway, we approved it, and turned out to be fantastic.
And all right, great idea. Looking back, it looks great. But when you look at these ideas, do you imagine how do you pencil out the potential free cash flow, for example, of a business that's just a thing in a PowerPoint presentation?
Well, I think at that stage of the game, you look at the market opportunity, how disruptive it could be, what sorts of business models might be available to you. But in the case of those two, since we hadn't even conceived of the concept for the business, it was impossible to evaluate those things. What we did look for, though, were people who were capable of building really big and successful companies. But
at some level, you must be thinking, how many zeros do I put on the check? You've got to imagine how big it could be. I mean, how do you pencil that out?
Well, I think, again, if we know what the idea is, then we look at the market size. We try to make reasonable assumptions. Are they assuming they're going to take over, 100% of the market in order to make it an interesting business? Or is this an interesting business if they only take over 10% over the next 5 years? And if so, how much of an advantage do they offer to their customers or their consumers, which is often an indication of what kinds of money you can get paid for offering a service or a product.
Interesting. Now, right now, when you're looking at the world of IT, there's sort of three big changes going on. Maybe there's more, but cloud, mobile, and social. Do you try to identify a trend and find a play within that, or do you find a smart entrepreneur and follow them wherever they're going to go?
Well, opportunity favors the prepared mind, and one of the great advantages of being in the venture business is you get to see all the new things before everybody else did. And so each of your investments leads you to see and understand other new investment opportunities. So in the case of mobile, we were involved in semiconductor companies 10 years ago, which were starting to enable handsets that we could see would get cheaper and better and faster and ultimately become a really interesting development platform. But it took, a decade before the iPhone came along and created a new business model that's enabled all the companies you know about.
Well, it's funny how that's happened. I mean, the research in motion, BlackBerries, the smarter BlackBerries seem to have incredible capabilities, but it took another device to take it a lot further, and the Androids may be pushing that even further now.
Well, Steve Jobs just does amazing things that, seem obvious in hindsight, but not so obvious to everybody else beforehand.
Yeah, right. But I want to talk to you about China. You went to China in 2003, or running NEA's investments over there?
That's right. Yeah.
craziness over there. Emily lived in China for a while, but the energy sector there and the new technology springing up, sometimes fantastic, sometimes fake. I'm thinking of stocks that have blown up in the last year, like Rhino. How do you pick the winners from losers in China when you're looking at the energy business?
Well, to be fair, so far we've only made one clean tech investment in China, a pure clean tech investment,
right.
But we have looked extensively at lots and lots of companies. And as you know, the ability to manufacture things, cost effectively is clearly there. The ability to create differentiated technology can be a little bit harder. And so we look for companies that have, really unique technology, and we have a big advantage in doing that because we have a big clean tech practice here where, of course, there's tremendous innovation, and so we can leverage, the people and the resources here to evaluate what we see there.
But what are the risks? Like, what do you worry about, happening to you that you weren't prepared for?
Well, I think it's a lot of the same things you worry about here. I mean, execution risk, I think, is still the biggest thing. I mean, creating a new clean tech company, scaling manufacturing is a really hard thing to do.
Have you guys had a big takeaway? Like, one of the things that strikes me about energy is that it's not like a typical venture investment that might work out over the course of 6 or 7 years. I was looking at this company, Konarka, that you guys invested in, I think, in 2001.
Yep.
That was 10 years ago.
Yeah, no.
I was in high school then or something. Or, well, that's not really true. But that was a long time ago. You haven't had the turnaround on that kind of investment. Is that part of the energy business?
I think it is. I mean, the nature of innovation here is different. It's not like software where it's very predictable how long it takes to create a certain kind of product. It's relatively capital efficient. I think the better analogy is biotech. You can create incredible things in biotechnology, but it's capital intensive, and sometimes even after a long period of effort, it doesn't work. On the flip side, when it does work, the markets are enormous, and there have been some, really exciting success stories.
Let me ask you another one. HelioVolt. You were tweeting, or not tweeting, you were posting honestly about this in one of the sites at VentureWire, talking about these investments. I want to quote it because I thought it was really telling and honest. The next step of evolution of the company requires a lot more capital than we have. We're actively selling the company. What's going on at HelioVolt? Are you having any luck in that active sale?
Well, we actually are. There's quite a lot of interest. One of the reasons I wrote that was that I wanted to make sure there was more interest.
Right.
Okay, and that actually worked out pretty well.
But what's the takeaway in that? Describe that company, if you would, briefly.
Yeah, HelioVolt is pioneering a process technology for making a kind of photovoltaics called SIGs. Stands for copper, indium, gallium selenide. And the advantage of that is that it has much greater photovoltaic characteristics than polycrystalline or monocrystalline silicon.
So it would generate more power for some solar panels or something.
With a lot less material. And so the trick is to make it cost effectively, and they have a process that does that.
And what went wrong, if I can be so bold?
Well, actually, I don't think a lot has gone wrong. When we first invested in the company, I looked at the two companies that at that point had been successful, SunPower and First Solar. I learned a little bit about them, and I found out that both of them took 10 years before they were successful. I mean, the stories are well known.
Right.
And so that's what I signed up for, and that's what we were prepared for. And I'd say we're right on schedule. We're now starting to deliver leading efficiencies. Our process is working well. But as I said in that article, it's going to require a lot more capital to go the distance, and that's not capital that we ourselves can provide.
How do you make those kind of decisions going in, and when do you know to take whatever exit you can? We talked about Groupon earlier. Here we've got another investment. You think the group of investment's working out. You might profit if you can sell your stake, but you're not waiting for the ultimate payout. Groupon you are, maybe. How do you make those decisions?
Well, it's a case-by-case thing. I think you have to evaluate whether you have the capacity to fund a company through to fruition, and if you don't, whether you can attract others to help you on that journey as an independent company. And if you can't, then you think about the opportunities that present themselves to find a partner that does have that capital and sometimes have the resources to distribute the products and services in ways that you might not be able to do as an independent company.
Well, because with stocks, it's easy, right? You look at today's price, and whatever happened in the past doesn't matter. Is it going up or down? That's the only decision you have to make. With private valuations and emerging companies, you don't have that.
Well, not only that, you don't always have the chance to sell a company. I mean, the average venture investment takes something like 9 years to mature to an IPO. And so sometimes you're sitting around the table and you get an unsolicited offer and you're not really interested in selling the company, but you think to yourself, well, how many other unsolicited offers am I going to get?
Right. All right. I really appreciate you coming by. This is good stuff, and wish you a lot of luck with NEA in the future. Scott Sandell, thanks a lot.
Thank you.